Boom shakalaka, what is going on, everybody? Randall here from Crypto Love. Today's episode, we are going to be talking about why this level right here, all the way down at the bottom, the ASIC S17, could potentially be where we're headed back as the next bottom, the next support, and why this chart right here actually has me quite concerned based on a minor live stream that I did 1 year ago. Also, we'll be talking about where Bitcoin is headed and all these dotted lines, what they mean, and the outlook for the future. So if you think that's something that's pretty interesting, then check out today's episode. Alright guys, now what's up? I do apologize if I seem tired. I've been doing this crazy thing where I am doing 2 weeks of insane web development training to see if I can land a web development job at the end of 2 weeks as a proof of concept for this idea that I have. So if you want to learn more about that, I'll put a link down in the description. But this article today by Xcavo on TradingView, I saw this, it drew my attention because it says break-even level of various miners. So he takes a look at Bitcoin and the different break-even levels. So we have the ASIC S9 around $7,600. That's by far the most popular Bitcoin miner. But another big one, the Silica, these are between $4,200 and $4,400. The least expensive one to produce Bitcoin, the ASIC S17, right at around $3,600. Now, what does this mean? Well, basically, miners need to pay for the equipment, they need to pay for the electricity, depending upon where they live and the equipment that they're using. It turns out to be a certain amount to produce a Bitcoin. Now, these are the break-even rates. Now, why does this affect things? Because the miners are the people who are creating the Bitcoin. And if the price of Bitcoin is less than what it costs them to mine it, chances are they're not going to sell it. However, they can only do that for so long. I mean, most of this is an operation for them, so they can only really hodl for so long before they're forced to sell what they have and or quit the mining business. Well, why is this important? Because the price of Bitcoin is dropping, but not only that, we have the halving coming up in 6 months, which means at that point, the price to mine Bitcoin is going to be much higher. So, taking a look at this chart, it reminded me of a live stream that I had with these three miners. Now, some of them own some pretty large mining companies, and basically, this was right when Bitcoin was above $6,000. So, if we go back, this was right around here, okay? When we thought $6,000 was the bottom. And I wanted to ask these guys, is $6,000 the bottom? This was actually October 26th, so where exactly? Right here, okay? Price was right here. I was like, is $6,000 the bottom? Because for miners, that's about on average what people were saying how much it costs to mine Bitcoin. And the answers were, while the price could go lower for a teeny little bit, chances are it wouldn't, because after 2 months, miners would be out of business if the price went under that. Now, if we take a look at things, price dropped below 1 month, 2 month, 3 month, 4 month, 5, almost 6 months, the price dropped below the $6,000 mark. So that means that even though the price where we think miners will have to hold Bitcoin doesn't really matter, because the price could break through there for quite a long time. It broke through for a year before. So this chart right here where, they can make a $3,600 Bitcoin, guess what? It could go below that for 6 months and not even cause an issue. Now, taking a look at the charts right now, this green line here, that's the miner, the least expensive miner, the ASIC S17 miner. And as you can see, we're in this big general downtrend since December of 2017, but since June of 2019, we've been in this smaller downtrend, and I've just extended it until it intersects with that miner, okay? Now that happens right around January of 2021. There was another date, this blue line here, which if we scroll back, since about the beginning of 2016, it was resistance, 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 and then switch to support, 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 support. Well, guess what? That also intersects with the downtrend we're in right about January of 2021. So January of 2021 is going to be a big time for some moves in terms of what's going on with Bitcoin. Will things happen before then? Probably not. But why is January 2016 so important? Well, if we take a look, this is the BLX chart, okay? So if we take a look, this is logarithmic Bitcoin price since 2010, and these green boxes display a year before the halving to the year after the halving. The halvings are denoted by these blue lines. Well, if we take a look, there's a previous all-time high before the halving, and Bitcoin doesn't actually reach that all-time high again until about 6 months after the halving. Same thing here, all-time high before the halving. Bitcoin doesn't reach that until about 6 months after the halving. So we have an all-time high here in December of 2017. Guess what's 6 months after the halving? Oh my goodness, you guessed it, January of 2021. Now, is this a coincidence? I think there's too many things going on here for it to be a coincidence. Or maybe I'm just finding things because I want to. But, there's too much going on for it to just be a coincidence. So, my thoughts are that, yeah, Bitcoin will probably just continue to trend down here until we have January 2021, when shit starts getting real because of the halving, because of the cost for mining Bitcoin, different things like that. So that's my thoughts on things. Just want to share that with you. Let me know what you think down in the comments, and I will catch you guys later. Make sure to check out the Monarch wallet and also Monarch Pay. Thanks for watching. Peace, peace.